Hi guys, welcome to my new video on YouTube and welcome you all for my YouTube channel. Today's video I am going to discuss about option buying versus option selling. This video is for my followers who are asking me for whether they should buy option or they sell option, which is the better, option buying is better or option selling is the better. So I am going to discuss here today what are the advantages of option buying and what are the advantages of option selling, when you should buy option and when you should sell options. When a new trader comes to stock market, first thing he gets attracted to option buying, right? Because when he learn to understand what is option buying, he comes to know that option buying has a limited risk, option buying has an unlimited profit. And for option sellers, there is an unlimited risk but only limited profit. And obviously all new traders get attracted to option buying, and even I was not different, I was like that only. When I was a new trader, even I used to get attracted, even I used to think like that, why people sell option when there is unlimited risk, only small limited profit. Option buying is better, right? Because you can make unlimited profit and small risk. But the fact is option seller has a better edge compared to option buying. I will give you an example. You tell me one thing, how many times you buy lottery ticket? Do you buy lottery ticket every day? Because you know that, right? You have to spend only 10 rupees for your lottery ticket and you can win like 5 lakh, 10 lakh, 20 lakhs. You can win it if you are lucky. But do you buy lottery ticket every day? You must have bought sometime back or long back once in a while, right? But you don't buy it regularly. Why? Because you have to spend only 10 rupees. You know that probability is very, very low. Like 1 in 1000 or 1 in millions kind of probability. Same thing like option buying, even though you see that unlimited profit potential in option buying, but that also chances are 1 in millions or 1 in thousands. So that's why all retail traders, new traders, when they are new to market, they go for option buying thinking that they can make a lots of money with limited risk. But the fact is most of the time option buyers lose money and option sellers make money. Just like a casino also like that only, right? Casino owner always happy when people come to his casino because he knows that more and more people come, more and more money they are going to lose and he is going to make money. I don't know how many of you have been to casinos, but if you go to casinos, you know that some casinos they offer you free drink, free food, everything. Why? Because they know that more and more people come to their casino, more and more money they are going to make it. So that's why casino owner makes money, but gamblers don't make money. Same thing like most of the time option buyers lose money and option sellers make money. And the thing is, if it was true that option buyers have unlimited profit, limited risk, option sellers have unlimited risk but limited profit, then all would have become option buyer, right? But you know that the number of option buyers, there are option sellers also, because option sellers also know that what is the advantage they have it. So let me discuss now what are the advantage option sellers have over the option buyer. First thing, option sellers have two ways to earn money, two ways to make profit, and option buyers have only one way he can make profit. What does that mean? Assume that today you are expecting Nifty to go up. You are bullish on the market. You think that from 12,000 Nifty will go to 12,100. You are very bullish. What do you buy? You go and buy call option. Assume that I am a option seller. I am also bullish like you. I am also thinking that today Nifty looks bullish, 12,002 it goes to 12,100. What I will do? I will sell puts. I am an option seller. I don't buy options. I sell option. I sell puts, you buy calls, because both of us are bullish, right? Three things can happen, right, in the market. One, Nifty can go up from 12,000 to 12,100. Second thing, Nifty can go down, right? We both are expecting market will go up. We both are expecting that Nifty will go up, but instead of going up, it can go down. Third thing what can happen, that Nifty is not going up, neither going down. So it is sideways. That means till market closes, it stays there only, maybe 10-20 points here and there, but neither goes up or goes down. That's what I am saying. Option sellers have two ways to make money. That means if it goes up, you being an option buyer, you make money and you make profit. Being an option seller, I also make money, I also make profit. Second thing what can happen, market goes down. That means both of us are wrong with our analysis. You also lose money, I also lose money. What third thing can happen? Market can stay there only, neither going up or going down. In that case, option sellers have the edge. If it especially near to expiry, that means you being a option buyers, you bought the out of the money options, your option can eventually become zero on expiry day and you may lose all your premium whatever you paid for. Being an option seller, I collect the premium and I make money. So that's what option sellers have advantage to make money two ways and option buyers have advantage to make money only one way. So that's why more professional big players, they are known to be option sellers, not option buyers. There is something called Theta, time decay, which is option seller's friend. That means he sells out of the money options by making his analysis, and he will sell that options, and if it stays below that, not necessary it has to crack or it has to go down if he sell call option. If it doesn't touch strike price, stays there only, and he pockets all the premium whatever he has collected and he makes profit. So option sellers have the benefit. Option sellers need big margin money to sell options. Unlike option buyers, suppose 100 rupees option, you want to buy one lot bank nifty, just you need to have 2000 rupees in your account. But being a option sellers, you need to keep margin. That means broker will ask you to keep at least 30 to 40,000 in your account to sell one option, one lot of option. So you can see the difference between option buying and option selling. You need a huge margin to sell option, but advantage is, even though you don't have margin money, if you have some shares bought in the delivery, it is lying in your demat account, you can pledge your shares and you can sell options. On basis of that shares which are there in your demat account, you can sell options. Some brokers give that benefit. My broker gives that benefit that I can keep my shares in demat account and I can pledge it and I can take the margin, but option buying, that benefit is not there. Now question is, does it mean that no advantage of option buying, only advantage is option selling? That is also not right. Like how I said, Theta is option seller's friend, time decay is option seller's friend. There is something called Vega, that is volatility, is option buyer's friend. You should buy option only when you are very much sure about direction. That means you are sure that today Nifty is going to go up. That means 100 points or 200 points, whatever you think that it's going to go up, then only buy call option. If you think that market is going to crash, it is going to fall heavily, then only buy put option. Now I will show you a historical chart with my laptop, and you can see that when option buyers make money and how much money they can make it.
Let me show you this chart. This is the dated September 26th. Bank Nifty 30,500 call option was trading around 5 rupees. At around 10:15, it was trading around 5 rupees, and within matter of 15 to 20 minutes, see where it went to. 5 rupees went to 630 rupees. So you can imagine how much options can move if you are an option buyer, if it makes a big move. 5 rupees went to 630 rupees. That means if you invested 5,000 rupees, it would have gone to 6,30,000 within 15 to 20 minutes. That's what option buying is. Sometimes it can give you huge profit within a matter of time if underlying, that means it's a bank nifty options, for that bank nifty spot has to move, spot has to make a big move, then only you can expect this kind of move, 5 rupees to 630 rupees. So now let me show you about spot chart, what actually happened on the spot chart on that day. This is where 5 rupees was in options, it went to 630 rupees. That means bank nifty spot went from around 30,050 till 30,700 within matter of 15 to 20 minutes, and it moved by 650 points. Bank nifty moved by 650 points. That's why bank nifty option also moved from 5 rupees to 630 rupees. So for that, is it possible that you can predict this kind of move? Yes, if I have to tell you, sometimes you can predict this move. For that, you need to know price action patterns. Out of 15 patterns which we discuss in the webinar, there is a pattern called RCBO, that is red candle breakout pattern. In that pattern, we take long trade once red candle high is broken. So once red candle high is broken, one could have taken a long trade by keeping stop loss here, and he could have captured a big move. But let me tell you, not that every time this pattern can give you this kind of 650 points move within a matter of minutes. Yes, most of the time it can give you big move, but sometimes it can fail. For that, we have a stop loss below the entry candle. But here what I wanted to show you, actually I wanted to show you about this options. This 5 rupees can go up to 630 rupees also within matter of minutes. That means underlying has to make a big move, then only option buyer can make big profit like that. 5,000 rupees investment can go to 6,30,000. But does it happen every day or every week? No, it can happen once in a while, like once in a year or twice in a year, but doesn't happen every day.
Another thing you can do is, before the events, not that just before the event, well before the events, you can buy options if you think that there is going to be good result which market will like it and market is going to go up. Something like election result, expect that next week there is going to be election result and you think that this party going to win the government and market will like that and market is going to go up. That time buying call option is an advantage for swing traders, because by the time result comes and result comes as favorable, market likes it and your option premium can go up and you can make huge money. And same thing, if you think that there is going to be some bad result, election result or something is not going to come good, market is not going to like it, market is going to fall, maybe 4 or 5 days before or 1 week before, and as per your expectation you bought put option, result was not good, market went down and your put option can make a huge money for you. So that is like that. Any events like elections or something like RBI policy which happens regularly, you know that market is not going to like it, so buy the put option well before it. This is especially for day traders because RBI policy happens during market hours. So once market opens, you have to make that prediction, you have to make that analysis how RBI policy going to be, it's favorable or not favorable. If you think that it's going to be favorable, then buy call option and keep it. So option buying is just like a ice cubes. Just like you take a tray of ice cubes from the refrigerator, keep it in the room temperature, and what happens? Keep it for 1 hour and go and see it, all ice cubes become water, right? All ice cubes will become water when you keep it in the room temperature. Same thing happens with the option buying. If you buy options, out of the money options, thinking that it's a cheap and you will make lot of money, whatever the price you paid, finally it's going to become zero, just like ice cubes becomes water. Now conclusion, whether I am an option buyer or option seller, I like to sell option. I am an option seller more than option buyer. Does it mean that every time I sell option, I don't buy option at all? No, sometimes I buy options also. Then when I sell option and when I buy option, I sell options especially near to expiry, like Wednesday, Thursday. Thursday is the weekly expiry, so I sell options Wednesday, Thursdays out of the money option. But first I have to be clear with the direction. So if you are a directional trader like me, option selling can give you great edge because you don't have to be exactly right with your direction, you are slightly correct with your direction, still being an option seller you make money. But option buyer is not like that. Option buyer, being an option buyer, immediately you have to be correct with your direction. You bought call option, immediately market has to go up. If you buy put option, immediately market has to go down. But option selling, nothing like that. If I see that market is sideways to slightly bullish, I sell put option. That's it. I don't do any adjustments, I don't do any hedging and all this. But remember, you have to be correct with your direction. But how to be correct with direction? For that you need to learn technical analysis. You need to learn price action, you need to learn pivot points, you need to know how to read the chart, how to analyze the chart. That all I teach in my webinar to the webinar students, and I'll teach them in my webinar how to analyze chart, how to take directional trades based on pivot points and price action. So in my webinar I discuss about how to analyze charts, how to analyze market is going to go up or go down, and accordingly you can buy option or sell option, whatever. So first you have to be clear with your direction. Chart reading skills can help you in learning whether market is likely to go up or go down, and you can plan accordingly. Here I want to give a small disclaimer. Remember, option selling has a benefit, advantage, everything, but remember, don't sell option without keeping stop loss. If you don't keep stop loss, you can make a huge loss and you can blow up your capital and you may even come under debt. So don't sell options until and unless you keep stop loss. As I said, option sellers have unlimited risk, that is true, but only if you don't keep stop loss. Option selling has an advantage for day trader compared to positional traders, because in day trading you can keep the stop loss and if you are wrong you can exit it. But for swing trader, positional traders, if market goes huge gap up or gap down, your stop loss may not get triggered and you may end up with big loss. So that's it guys, that's about option buying and option selling. Now you know that what are the benefits option buyers have, what are the benefit option sellers have. So I prefer option selling more than buying, but always I keep stop loss, and once my stop loss hits I am out. I will not try to do adjustment and all this. So option selling has given me advantage over option buying. Initially even I was an option buyer when I was new to options, and after some times I used to get frustrated because regularly I was losing money. Then I became an option seller, and I have no plans to go back and become an option buyer. Only occasionally I buy option, which I already discussed when I buy options. And thanks guys, thanks for watching this video. And if you want to learn more about day trading, like if you want to learn more about taking directional trade based on chart analysis, you want to learn more about pivot points, CPR, price action, then you can join my webinar. I have given the link below this video and you will know what all I am going to cover in my webinar on day trading with pivot points and price action. I hope you have liked this video. If you like this video, go below this video, there is a subscribe button, hit that subscribe button and then like the video, and if you have suggestion you can put it in the comment section. And I will see you again with the next video very soon, and thanks for watching.